Record. All right. Hello, everyone. Thank you for joining us today. My name is Michael Jansen. I am Economic Development Specialist for the Town of Sahuarita. On behalf of our mayor, town manager, and town council, I'd like to thank you all for joining us again. Those coming back or those who might be new, this is our fourth webinar that we've hosted since the stay-at-home order went down a month and a half ago or so. And two of our three webinars prior have been focused on the Paycheck Protection Program, which is the large loan program that the federal government has passed and reloaded. And well, that's a big part of the puzzle. We also saw that there were some people that were having some trouble getting into that program and were getting left in the queue. So we wanted to make sure we also spoke to the resources that are available aside from that. So I am excited to introduce our speakers today. First, we'll have Lesli Pintor, who is the Executive Director of Growth Partners Arizona. And then we'll also have Brian Quijada, who is the Director of Rural Economic Development at the Community Investment Corporation. We want this again to be a question and answer session. So if you have any questions, feel free to write them in the Q&A or the chat during this. We want to keep things fairly concise. Lesli and Brian will give an overview of their organizations and what types of loans they're doing and their clientele. And then we'll have some time for Q&A. So with that, I will hand it over to Lesli to start, and she can share her screen.
Hi, thank you so much, Michael, and thank you for having me here today. It's always a pleasure to be able to engage with people in the community and small businesses and nonprofits who are looking for some resources. And I think this new reality of working in Zoom is actually working quite well for purposes like this. So I appreciate being here today. And I can't believe it's already been 6 weeks or so, or almost 2 months that we've been under some sort of stay-at-home order. That's kind of hard to believe. So here I'm going to share my screen with you all and run through a few slides today just to tell you a little bit about who Growth Partners Arizona is and what we do. Now if I can figure out how to advance the slides, there we go. Growth Partners Arizona is a 501c3, so we're a nonprofit organization, and we were founded in Tucson by some local philanthropists and business people in 2012 after the last economic crisis. And initially we were a community loan fund specifically to provide financing for nonprofits in Tucson and Southern Arizona. Capital was raised from local foundations and individuals and other nonprofits, and so we are a private nonprofit organization, and we're like a bank, but we don't have deposits. We made our first loan in January of 2014, so we've been doing this for about 6 years now. In 2017, we became a community development financial institution, which is a certification through the U.S. Treasury Department. For purposes of everybody on the call today, what that means is that we've changed our focus a little bit, and we'll talk about that in a second. What is a CDFI? Well, CDFIs, and there's about 1,000 CDFIs across the country, including many credit unions. The purpose of CDFIs is to invest in underserved communities where traditional banks don't usually lend money, whether it's because a business is too young, whether there's not enough collateral or credit is a little weak. Just if you're not meeting the stricter criteria of a regulated financial institution, a CDFI can be a good option for financing. And so we're intent on trying to help those folks who can't get a loan from a bank right now grow their businesses, expand, get financially stable, and get to the point where they can go to a bank. Our goal is to be able to help small businesses and nonprofits get to that point within 3 to 5 years. We like to be profitable so we can build reserves and grow our business, but we're not profit maximizing. We put the community first. And there, as I mentioned, there are about 1,000 CDFIs in the country, including 16 in Arizona. Who are we now that we became a CDFI? Well, we are a mission-focused nonprofit lender focusing on those underserved communities. We are a supporting organization of an SBA lender that some of you may have heard of called the Business Development Finance Corporation. And we provide loans and technical assistance for nonprofits and small businesses. And that technical assistance, you don't have to be a borrower. You don't even have to apply for a loan to get that technical assistance. If you just want to talk through some things and ask some questions, even if you have another lender, I am more than happy to get on the phone with you and just talk through some things and help answer some questions for you. That's part of our mission. Frankly, it's part of what I really like to do. So I look forward to hearing from some of you. We do give priority to borrowers who are economically underserved. And in the way that manifests itself most often is what census tract your business is in. It also includes people who are, or organizations who serve minority and low income populations, businesses that are owned by low income and minority people, or businesses who employ a lot of nonprofit, or excuse me, minority and low income people. So those, we give priority to those. If you are a plastic surgeon in the foothills, we are probably not your lender. But we are, again, our goal is to help those folks who can't find financing elsewhere for a variety of reasons. And we tend to be more flexible and affordable than some other options out there. Flexible because we are not regulated by the federal government like the banks are. And so we try to work with our borrowers on a loan structure and repayment plan that works best for them. So I'm going to talk to you about 4 different programs right now. We are one Somos Uno Tucson Resiliency direct loan program. We are not a direct lender through that, but we have provided capital to the fund. It's administered by our affiliate Business Development Finance Corporation, and other organizations in town have contributed to that fund as well. This is a fund that you can apply for that is for the PPP, and these are some of the criteria and the terms available for that loan right now. It's available as long as the funds are available, and as of today, I'm not sure where they stand on applications versus available capital. But if that's something you're interested in looking at, please go to bdfc.com. There's additional information there about that particular program. Right. And Michael, you said these slides would be available for folks later, so they don't have to, you'll have this on your website?
Yeah, we are recording this program, and so we'll make it available. And if people also would like to see the slides, I can also get them from you to send them out. So either way.
That might be helpful in case people are furiously trying to write notes right now or taking pictures with their cameras like I do.
True.
Another program that we have, and we are doing the Kiva program with in partnership with Brian's organization, the Community Investment Corporation. This is a program, again, not direct loans from Growth Partners Arizona. This is a community-backed online lending platform. Businesses, entrepreneurs who have a really good social presence and reach that way are really good Kiva candidates. This loan program is particularly good for people who need to borrow very small amounts of money. The loan amounts are from $1,000 to $15,000. Normally it's 10, but they've expanded it to 15 for this particular point in time. The great thing about this program is it's 0% interest. Once you get approved through the Kiva process and you get on the online platform, people like you and me can lend money to a business in increments as little as $25. So it's really cool because your community of people who support your business, who frequent your business, can go on and lend you money. And the term right now, I put here that it's 3 years with no payments for the first 6 months. It's actually the first 6 months and then 3 years. So it's a total of 42 months right now. It's really good. So not only do you have 0% interest, but for the first 6 months, you have no payments at all. This is a great program, again, for folks who need to borrow just $5,000 or $6,000 to help grow their business. The next program we call our Small Business Success Loan. And this is for businesses that are a little bit further along in their evolution. We do loans from $10,000 to $75,000. Again, we are a little bit more flexible in our underwriting, so minimum FICO scores are a little bit lower than some lenders might require. And this is for, again, for you to grow your business, expand, and we can do terms of up to 5 years. And then our last program we have is specific for nonprofit organizations. The nonprofit needs to be in business for at least 3 years with $250,000 in revenues. And our maximum loan here is $200,000. However, we can consider larger loans and we participate them with other lenders. So if you are a nonprofit and this might be something for you and you need more than $200,000, we can still chat about that. I'm not going to go over all of the particular criteria here because you can read all that. You can also go to our website, growthpartnersaz.org, and the details are there, as well as our loan applications. And of course, you can call me. I have my contact information back here, my email and my phone number. Happy to answer any questions you might have. And I know I went through that quickly, but we've got a lot of great information to share with you today. And with that, I'll let Brian go.
Yeah, thank you, Leslie. We'll hand it over to Brian then. And again, if you guys have any questions for the panelists in general or one in particular, please put them in either the Q&A or the chat sections. We'll get a hold of those and we'll start asking those once Brian's done with his talk. So Brian, go ahead.
Well, thank you, Michael, and thank you all for joining us this afternoon. I'm very excited to be here and also discuss these options that community investment has available for the business community and nonprofits as well. So a brief background on CIC. We are also a Tucson-based nonprofit 501c3 organization. We've been around since 1996. And we do manage 3 distinct programs. First is home ownership assistance, which comes in the form of down payment assistance for first-time home buyers, and a mortgage credit certificate, which can provide up to $2,000 in a tax credit annually for first-time home buyers. Secondly, a bond compliance program that is for municipal bonds taken out for funding of charter schools. They usually take these out to either build a new school or fund some operations and so forth and expand. And then finally is what we're going to be discussing today, which is our business financing programs, which come in the form of lending and also a new service we recently launched on equity crowdfunding. So first and foremost, similar to Growth Partners Arizona, to Leslie's organization, we are an alternative lender. We are focused on the community. We want to provide those tools to entrepreneurs to create a sustainable economic impact and promote job creation. So our loan program is designed for those small businesses who aren't bankable yet. We want to be able to help you, guide you along the way, provide technical assistance so that once you graduate through our program, you will be eligible for traditional bank financing. And I take that opportunity to mention that it is crucial to maintain a good relationship with your bank during the time, because once you graduate from these types of programs, that will be the logical next step for your business when you need financing again. So when it comes to our loan program, we broke it down into 2. We have the microloan, which is up to $10,000, as low as $500, and then we have our small business lending portfolio that's from $10,000 up to $100,000. They're both at up to 5 years and interest rates between 8 and 10%. The difference between the 2 for the microloan, for example, our underwriting is going to be a little bit more flexible than a traditional bank, but On the microloan, it's going to be a little bit more flexible at that. It's easier to work with some startups and so forth under that program. For the small business, it's going to be a little bit more, look at things a little bit more closely. We're going to require more documentation as a bank would, but we're still looking at to it in a much more flexible manner for your business. I do want to announce that as soon as I got on this call, I did receive notice on our COVID-19 emergency microloan. We launched this program a couple weeks ago, but due to high response, we did run out of funding. So I just got word that we are reopening this program. So this is a very special, unique program, and I will provide the link in our chat for the inquiry on this. But it's up to $10,000, terms up to 5 years, interest rates up to 3, and it's interest only for the first 6 months. So ideally, it's about $25 for the first 6 months, and about $198 for the remaining 4.5 years. No prepayment penalties, none of that. So I will provide that link shortly after I wrap up my portion of the presentation. Additionally, we recently launched equity financing through a partnership we created with the crowdfunding platform WeFunder. This is very similar to Kiva, only on a much larger scale. And Kickstarter is a common platform where businesses develop a product and they launch it on the website to gain a following. So Kickstarter is WeFunder is available where you can pitch an idea and you can where you give equity to your investors to take your business to that next level. A lot of examples include that I've seen on there are like breweries, coffee houses, and even some tech software companies as well. So there's also a good option available for businesses seeking some additional growth and capital. And WeFunder does have a lending component to it. Granted, these are loans that are larger loans that are available, but there is a potential lending component attached to it as well. So just common questions that I just wanted to cover with folks on alternative lenders, and questions that we see quite often is how we differ from banks and why banks don't lend to small businesses. There's various reasons. I was in banking for 15 years, so we saw this quite often. Banks do have a threshold that they want to meet, so oftentimes they will reject smaller loans below 100,000. The time in business or any credit challenges do come into play. So organizations like CIC, like Growth Partners, this is how we come into play. We can make loans as low as $500. If your business is under that 2-year period, we can work with you, and we can consider other factors where a bank is unable to do so. Same thing with credit challenges. Depending on what they are, we might be able to work with you. If not, we can provide resources with credit repair that can get you to that point where you can become, or we can fund you and then grow your business to the bank level. And of course, we provide technical assistance. One-on-one, we are starting to offer webinars and so forth. So we do have this community mind in place where we want to help you grow and succeed through various resources that we offer. And one other item that I did want to provide here is if you're on here looking for additional sources of funding for your business, or you have plans on how to fund your business down the line, these are just some tips to prepare for a meeting with your lenders. Always want to know what lenders want to know how you're going to be utilizing funds. So if you have an idea or you want to buy a piece of equipment, it's good to have some details as to how you're going to be utilizing those funds and perhaps how it's going to impact your business. Financial statements, both banks and alternative lenders like ourselves, we're going to require tax returns, financial statements, balance sheets, and P&Ls, and bank statements. So just knowing that you can start compiling those items for your lender. And when it comes to collateral, think about what your business has to offer. One thing where we're a little different is we can think outside the box a little bit and seek out personal assets that you may have, such as a vehicle or even your home, if your business does not have sufficient collateral. And also we can consider an external guarantor that's not in any way involved in your business, say like a parent or a family member that's willing to do that. Think of it as a co-signer when you're buying your first car. So we can consider those items as well, just to get you going for that. But and finally, our eligibility requirements, it just must be officially registered business or nonprofit organization, have invested equity into your business, and of course operate within our service area, which includes Pima County, Graham, Cochise, Santa Cruz, and Greenlee. And I'm providing my contact info there. Please feel free to call me or email me directly, and I will shortly, as I said, include that link for our COVID-19 emergency microloan.
Awesome. Well, thank you, Brian. Yeah, you said you provide that link in the chat section. Or yeah, go ahead. Well, the first question I had to kick things off, and if anyone has any questions, again, please write them now in the chat or the Q&A. I just saw on your screen, Brian, you said that sole proprietors can apply for your loans. Mm-hmm. That's a big question that I've gotten about, you know, a lot of the loans right now. Or is that also true with you, Lesli? Oh, I think you're muted. But I think I saw a yes, that sole proprietors can apply also to yours. So, all right, nice. So you just put that link on there, and that is for your new, Brian, for your new program that was just recharged, correct? Okay. A couple of questions I had just to kick things off then and clarify some things. So sole proprietors can apply. Are there any issues if they've applied, or maybe even if they've received other funding like a PPP, or can they also apply for that, or is that going to affect them if they do apply?
I would say lenders want to know what all of your loans have been used for. And so if you've applied for and received a PPP loan, that doesn't necessarily disqualify you from any other loan. We would just verify that you're not wanting to borrow money for the same reasons you borrowed money under the PPP loan, for example. So, you know, the PPP loan was designed to help people retain employees and just survive an 8-week period, basically. And so we know that after that 8-week period, and as things start to loosen up a little bit and you try to get back to business as usual, whatever that is going to look like, you probably are thinking about things you need to do differently in your business, and different products and services you may need to offer, different investments you may need to make, and that might require a need to borrow some money. So no, borrowing money elsewhere doesn't necessarily preclude you, but we need to understand why you've borrowed money, and obviously make sure that you have the resources to be able to pay them all back.
Sure.
Yeah, so to follow up on that, receiving SBA funding would not disqualify them for our loan. As a matter of fact, we designed it to supplement SBA funding. We just want to be responsible in extending these loans, that it's not going to negatively impact their cash flow going forward. That's the most important thing.
Okay.
Right. Good point, Brian. I mean, we don't want to make matters worse for a business by loading on debt when there might be other options as well. And sometimes there could be. So borrowing money isn't always the best thing to do, or the most efficient way to accomplish your goals either. So that's part of what we do when we sit down with you and look over everything. Great.
I guess a question to sort of supplement that, we've had a lot of businesses that I've seen that didn't, at least initially, didn't feel they needed to apply for assistance, but then as things kind of drag on, you know, have sort of dragged on, and like you said, it's already been 6 or more weeks, you know, maybe they are considering applying for one now. And so I would say, if for anyone considering applying for a loan, why would you, maybe we can start with Brian, I'll say, why should a small business or nonprofit go to you versus, let's say, the PPP or the economic injury disaster loan. Maybe I'll start with you, Brian.
Okay, so actually we are encouraging businesses to continuously seek both PPP and EIDL. Unfortunately, we do know that it has been pretty time consuming in them receiving funding. I believe it was towards the middle of March. It was roughly about 5 to 6 weeks ago when Arizona was declared an emergency, a disaster area, and EIDL became available. And I'm learning that folks are just starting to receive those funding. So what we're offering is we are able to turn these loans around much quicker once we receive the full package, which it is a limited package. We are doing limited underwriting compared to our traditional loans, but we have been able to turn these around in about 2 weeks. Okay.
So a little bit more of a personalized experience, focus on and get things through a little quicker. Do you have anything to add to that, Lesli? Or
yeah, I would say if you have not applied for either PPP or EIDL, you should. Those should actually be your first options because the financing structure is so favorable. The PPP loan can be mostly, if not entirely, forgiven if you use the funds the appropriate way and do all the proper reporting. And even if you do have a little bit left on the PPP loan that you have to pay back, it's only a 1% interest rate over I can't remember the term, but that's very, very favorable. And the EIDL loan is very, very favorable because it's long-term, very low interest rate. So apply, just apply. Even if you get approved and decide not to take the loan, you at least have control over that and you have the option to make that decision. Cash is king right now, so if you have ways to gather cash resources, do that. So my recommendation is to start there first, and then organizations like CIC or GPAZ, we have different programs, and something might work better for you than another program. There's different qualifications and things, so you just have to kind of study those things and see what works best for you. And then I want to kind of piggyback off of something that Brian said way at the beginning of the call, and that is, neither one of our organizations accept deposits. So all of you have deposits at a bank or multiple financial institutions, and whether you have a loan with them or not, you really should build a relationship with whoever you go see when you make your deposits. Because someday you will want to have a banking relationship and start borrowing money there. And I think a lot of business people and nonprofits discovered in this whole PPP application process that their bank wasn't necessarily paying much attention to them because there are bigger fish out there. And so now's the time to start building that relationship, maybe when they get finished with all the PPP stuff. But it's important to have that advisor available to you as you grow your business.
Okay. I had a question. I think Lesli kind of answered it in terms of your sort of target audience, but Brian, who would you say CIC's kind of target audience is in terms of businesses or nonprofits? Do you have kind of a clientele, or is it kind of all hands on deck right now at anyone? Or
it is that's a question I've received a few times, and we do have a pretty diverse portfolio. We've done various types of businesses. So an ideal client, I just could not pinpoint one for you, but a couple of things that we are looking at when we've spoken to clients is, number one, like anything, right? Ensure that they have cash flow and collateral. So if it's a service industry that doesn't rely on collateral, that's when we start looking at other alternatives. If they have personal assets or a guarantor, an external guarantor that can provide that security. So we take all those inquiries, we analyze what's available, and then try to make the best recommendation possible.
Okay. I know, Lesli, you kind of mentioned traditionally look at kind of the underserved communities. I don't know, do you have anything to add right now in terms of who you're kind of working with, or?
No, not necessarily. Just to remind everyone that we prioritize those applicants, but that doesn't mean if you don't fit in one of those categories that we won't be able to help you. So if you're not sure or you just want to find out, it could depend on timing, what kind of capital we have available and what the rest of our portfolio looks like. Right now, we do have some flexibility to be able to do more that do not fit into that category. So don't be afraid to reach out and ask and call and find out.
And what would you say, Leslie, right now is sort of your turnaround looking like in terms of getting things in, assuming applicants have their full, their full package applied? What are you kind of seeing?
Yeah, I would say it's probably in some ways a little bit longer than normal because of all the things going on with the PPP. My loans get processed by the same folks who are processing the PPP loans within the Business Development Finance Corporation. So it might be a little bit longer, but we generally try to get them turned around in 2 to 3 weeks. I think if you maybe have, think in terms of maybe, 2 to 3 weeks is our target. Let's just put it that way.
Okay. Yeah, and you said both of your organizations do nonprofits and businesses as well. I think you said that as well, Brian, correct? Yeah. Okay. All right. Well, if we have any last questions, otherwise, we're up. If there's anything you guys want to add right now, or I know you put your contact info, we'll post this again and let them know. But yeah, really appreciate everyone's time. And it's a little
Michael, it looks like there's a question from Chelsea in the queue.
Oh yeah, just came in. I can read that. All right. One of the negative comments was the PPP was the lack of communication between lender and borrower. What does that process look like, and how frequent do you update the borrower? So maybe how often do you guys keep in contact throughout the loan process, maybe?
I would say for my organization, as frequently as you would like. Always feel free to call or email. We're a pretty small organization and a small shop, so you're not going to get lost in the shuffle of things. So we can have that conversation about how frequently you want to be updated, and you can always call and email at any time.
Yeah, and similar to Leslie, we're also a small organization. My clients have my cell phone number, so they could reach me anytime, and also my email address. So I'm always available. In terms of frequency of updates, it's at minimum once per week, and at times multiple times per week. And just with our emergency microloan, it's the average has been at least twice a week that I've been reaching out to borrowers for clarification, just because we know the urgency. So we want to make sure we have any questions answered or any document request immediately, so we can turn these around and fund them as quickly as possible.
Yeah, and maybe kind of as we look towards the end here, what do you guys kind of see? Maybe you can share just sort of a general outlook on business climate or your clients as things are starting to open again. I'm going to be going back to the office. Are you guys meeting with people or just calling, or maybe you could just give sort of your general outlook of the economy now as we start to get things going again? Maybe starting with Brian.
So currently we are working remotely currently. So all of our communications with our borrowers have been through the telephone and email. Our closings have been as well digital. So borrowers are signing I'm emailing closing documents, and they're sending them back to me, and we're funding the next day and so forth. So right now everything has been remote communication, and we still have not been given any indication when we're going back to the office, but it's working well, thankfully. So again, we're here, we're available on our mobile phones.
Cool.
I would pretty much ditto what Brian is saying. Work remotely most of the time anyway, and we can accommodate signings as we need to. So I don't see us going, well, I don't see us going back full force immediately. So we'll be doing this for the foreseeable future this way.
Okay. All right. Well, I'm sure if anyone has any questions, they can email you guys or call you at the phone numbers you provided. Really appreciate you guys being part of this webinar again. And yeah, we're kind of excited to see, excited, but also a little anxious maybe about how things kind of turn out as we start to open things up again. But really appreciate guys' participation, everyone, and also the panelists. So thank you. And yeah, we'll be in touch.
Thank you. Bye, everyone.
Thank you. Bye-bye.